Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research, for an update on levels to watch in the Nasdaq 100. And Randy, it's here. This is the week, Jackson Hole. It's taking place on Friday. We don't typically talk about it, but it really could be one of the most important events for the trading year.
Yeah, I guess it kind of depends on your perspective. I'm not sure that it's a huge deal. And the main reason is because I think a lot of times people are sort of waiting to hear some sort of earth-shattering revelation from Jay Powell or someone else at the Fed. And I'm not so sure we're going to get that. I think that we pretty much have a pretty good roadmap on what to expect on interest rate hikes. You know, we've already got a quarter, a half, and a couple of 3/4 point hikes. The only question really now for the 9/21 hike is whether or not it's going to be another half or another 3/4. And frankly, the odds of that based on the futures markets are about 50-50. So I think what I think will happen is Jay Powell will be hawkish. He will try to convince everybody that we need to hike aggressively. But then the main thing is, remember, we've got a PCE this week. We got another CPI, another PPI, and another employment report, all of which are going to come out before the 9/21 rate hike. And any of those could change things. But I think what Powell wants to do is make sure that the market doesn't get ahead of itself. And I'm frankly happy to see this pullback we've seen in the last few days because, I mean, we had a massive rally. The NDX, for example, is up 16% from its mid-June lows after falling over 30% to get there. That's a pretty nice rebound, and all in the face of Fed hiking. That's pretty amazing, really.
Yeah, it really was trading as if they were expecting more of an accommodative Fed. But Randy, when you take a look at the volatility markets, is there anything where it could see, you know, if we look out a little bit longer term, because of course, September, October are more seasonal and volatile times of the year. Plus we have midterm elections coming up. So is there anything you could see in the futures that might indicate there's going to be some chop or specific levels that they're watching?
Yeah, it's not as dramatic as you might expect, but you're right. The September has a track record historically as being the worst month of the year. October, I believe, is second. So, and if not, it's maybe third. But those 2 months do tend to be volatile. And most people remember the big meltdowns we've had in 1987, in 2008. They happened in October. So those are the kind of times that we remember. A couple of things I would point to. So I took a look at the put call ratios based on open interest, which is the more longer term looking ratio for the NDX. And just in the month of August, which is now only 3 weeks old, that ratio has gone up from about 90 to about 115. That tells me people are accumulating puts, which means they are preparing for the potential, as you just said, for a little bit of weakness or some volatility in the coming months. The other thing is, of course, the VOLQ, which measures, you know, just overall volatility. That has crept up from about 24 to about 27 here just in the last few days, as we've seen a little bit of pullback. Not quite as dramatic as you might expect. I think there are times in the past where we've seen those ratios go even higher than that. But keep in mind, you know, we've got a couple more days before that meeting, and we've got a few more weeks before we get into that period. So I think these things are already trending in a direction they're likely to get even higher as we get closer.
All right, Randy, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
You're quite welcome.